welcome back, everyone, to another weekly episode with the Money Mentor podcast. And as always, a pleasure to have you on board, Doc. Over to you, mate.
Pleasure to be here. Yeah, pleasure to be here, and another big week in property where we're just really shunting through the year at the moment, are we not? We always
Absolutely,
refer to
mate.
that. But we've got, we're now the second week in June, so we're nearly into the next financial year. We've got some big news coming up next week. Of course, it will be the Reserve Bank's meeting, the Reserve Bank's June meeting. All eyes on that, of course. And we're also going to have some immigration data out, the latest immigration data, which will be interesting as well. But this week, we've got our latest My Housing Market rent report to go through. I'm sorry for tenants out there. There's no good news really with the latest data. In fact, it's sort of bad news again. And I get a bit sick of the same old, narrative when we're speaking about our monthly rent reports, because it's just really doom and gloom for tenants. Great news for landlords, of course, because there's plenty of demand for rental properties out there, the very few that are available. But we've also got the latest ABS home loan data out, which was for April. And that's also some interesting news for particularly the buyer breakdowns. And we're seeing a big surge in investors coming into the market in terms of that loan data. No surprise, markets are still pretty robust. And the one thing I didn't mention we'll be talking about next week will be the latest labour market stuff. So it'll all be pretty interesting stuff next week. Reserve Bank decision and the labour market. So hang on to your hats for that. But we've
Looking
got
forward
this
to that
week
one,
to
Doc.
go through first. So let's get the ball rolling and let's have a look at the latest My Housing Market data for the week ending Wednesday, June the 12th. Of course, My Housing Market acts as an independent commentator and provider of data, and we work very closely with the folks at Infinity. And of course, we produce this podcast every week for those that are wanting to keep up with all the latest data in relation to the housing market and what's driving the housing market. And of course, our mantra is the current state and future prospects of your housing market, and it is all about the current state. So we try to get all the latest information first, and we relate that information to the prospects of the housing market. So let's get going. It is the week to Wednesday, June the 12th, middle of the way through June already, beginning of winter, of course.
Already, mate?
Look at them. Already, yes. It's pretty chilly down here in Melbourne. I'm heading back up to Sydney in a couple of hours, and I think it's pretty chilly up there too. But that's what we expect in winter. And perhaps it's a bit of a change from the warmer weather, but it is, and we'll embrace it for a month or so, and then we'll get sick of it and we'll be looking for some sunshine. But so we look at the latest May house and unit rents, the My Housing Market May house and unit rent report. We're also, as I mentioned before, look at the April home loans, and we finish off as usual with the latest weekend auction results. Of course, it was a long weekend last weekend everywhere for the King's birthday. It's very hard to remember to say that after spending a lifetime saying Queen's birthday, but nonetheless, it is the King's birthday holiday long weekend everywhere except Queensland. So how did that affect the auction results? We'll have a look at that at the end of the show. So no good news for tenants again this month, unfortunately. It's difficult to come up with something different to say, in terms of the narrative. High rents are still rising, and what we did notice this month of May was we didn't even, can you believe it's possible that we saw vacancy rates falling in both capitals, in all capitals, in both houses and units across the board in May. And of course, to some degree, that reflects the seasonal impact of following on from April, which is a holiday month. And of course, we get less demand over that holiday month because of distractions. But demand came roaring back in May, and we saw vacancy rates falling across the board for both houses and units in all capitals. So let's have a look at the house rents. These are median asking rents over May. Look at Sydney now, $819 a week median rent, house rent in Sydney. That's up 2.3%, up 9.2% over the year, and that vacancy rate just 0.7%. Perth was the big performer again for house rents, up 2.3%, median rent $670 now in Perth. Perth has also been the strongest performer over the year, 12.6%. And no surprise, crazy low vacancy rates, 0.4%. In Perth, we also saw Melbourne up 0.4%, Adelaide up 0.8%. Hobart and Darwin were flat. Canberra was down 1.4%, and Brisbane was flat also with Hobart and Darwin. After the Brisbane market's been rising strongly recently, a bit of a pause. Interesting that Brisbane is now tracking below where it was a year ago, but that's because we had a surge in demand and a surge in rents at the peak of that migration period into southeast Queensland, particularly Brisbane. So they'll see some adjustments over the next month or two in relation to that. But nonetheless, when we look at those vacancy rates, how silly is this? They're all below 1%. When we consider the 2% is the benchmark for a balanced market, notional benchmark for a balanced market, but we're not even at 1% more. And as I said, remarkably, all down over May. Same story for April. Same story for units over May following that April break. Look at Sydney unit rents also up 2% over the month. Big surge there, 2% over the year so far. The vacancy rate's a little higher when we look at the capital cities there for units compared to houses. But the worst there is Canberra at 1.6% for units, and that's still quite a low rate. Still upward pressure on rents, even with a 1.6% clearance rate. Some of those other clearance rates are just crazy low. Brisbane again up 0.6% over the month. That Brisbane unit rental market's been very, very strong. Look at that, up 15.7% Brisbane rents over the past year. Same result in Adelaide. Adelaide and Perth are smaller unit markets, so they tend to be a little bit more volatile, but Brisbane has a substantial unit rental market. So that result is, very profound, particularly if you're looking for a property unit to rent in Brisbane. Melbourne down a little bit, some seasonal aspects there, perhaps working the other way. Bit of a surprise because Melbourne unit rents have been going through the roof. Flat so far over the year, but the vacancy rate's just 1% in Melbourne. We'll keep an eye on that one going forward, but certainly big queues still outside vacant unit rentals being advertised in Melbourne. So, but again, really perhaps some outside joy for Melbourne there in the shorter term, but we need some sort of a trend to start to appear to say that we've got a better position in Melbourne. And maybe that's reflecting, as I said, a little bit of the opposite in terms of the seasonal impacts with those migrant numbers picking up. We'll get the latest migrant data out over the next week or two, so we'll be able to check on that. So sadly, no good news for tenants really overall. Vacancy rates down sharply over May in all capital cities for both houses and units. But there is some seasonal effects there. So we keep our fingers crossed that that'll improve. But don't hold your breath on that. We're in a real bind in terms of trying to provide accommodation, particularly rental accommodation in our housing markets. Now, home loans, very strong result for home lending. This is the latest April home lending data from the ABS, up 4.7%. That's a very big rise over a month. We've had some question marks over the ABS series. Even themselves have admitted they've had some difficulty with their home loan series, not just with their seasonal adjustment modelling coming out of COVID, but also their surveys and what they're getting from the banks. They've had some questions about, and they've had to tickle it up, which they've done. So I think that even though it was a bit of a surprise earlier in the year and late last year where we did see falling home loan lending, despite strong results in other measures of the housing market, such as house price growth. But that's certainly bounced back, perhaps compensation there. Over the last 2 months, home loans were up over 3% over March monthly, and now up 4.7% over April. So very strong results there. So plenty of lending going on, and just more validation of how robust our housing markets are at the moment. So if we break it down into buyer types, and that is owner-occupiers, total owner-occupiers, investors, and first home buyers, strong results for total owner-occupiers, strong results for investors. But interesting, but not surprising, we're continuing to see that trend of lower first home buyer activity. And we shouldn't be surprised at that because it's tough going for first home buyers. Not only are they having to pay higher prices, they're also finding it hard to save that deposit because of high rents and
Mm.
high prices generally. So really a tough gig there for first home buyers. And the gap between first home buyers and investors is now starting to widen towards record levels. So I guess if you follow the market and think, where's the energy in the market? It's certainly with investors, and we can see there over the month, investors up 4.4%. This is seasonally adjusted data. Total owner occupiers up 4.1%, but first home buyers down 6.6%. And the really interesting stuff is the year to date. So that's the first 4 months of this year compared to the same period last year. We have investors up 26.1%. So that's a big surge in investor activity. And when we look at the full year, so that's the year ending April this year versus the year ending April last year, investors are now 2.7% higher than that period, which just shows there's a significant recovery happening in that investor market. Investors are up and running, attracted by those higher yields, attracted by capital growth, and of course looking for good returns in the face of still high mortgage rates out there. So, and the realisation that with all the taxation benefits that still accrue for investors, that housing remains almost a bulletproof proposition for investors, and they're voting quite clearly by taking by this surge in lending. What we've done here, which is a bit more about supply in the rental market, is we're looking at established home loans versus new home loans, and that's loans for new houses or houses under construction. And you can see there that the relationship between established home loans, that's for established homes, and new homes has really fallen away quite sharply. And that's just another sign of how underbuilt we are and how we're continuing to underbuild where there's this lack of lending. And the lending really does reflect more of a real-time environment compared to, say, building approval data, which is obviously approvals and not completions. This is lending for homes either under construction or having been completed and as new. So when we take the actual proportion of that, this is the proportion of new and constructed home lending versus established home lending. And you can see there that it's now down to 20.2%, which is historically low, up a little bit from last month, but this is just another indication that we're continuing to underbuild, and that unfortunately will only mean higher prices, which is good news for homeowners, investors, etc., but not good news for first home buyers, and of course not good news for the rental market over the longer term, because we need more supply to get those vacancy rates down and to put some downward pressure, or at least some steady outcomes for rents in the marketplace.
Absolutely.
So it was a long weekend. It was a long weekend last weekend, King's birthday holiday, everywhere except Queensland. I think Queensland has its King's birthday holiday in October. Correct me if I'm wrong, but I think they have their holiday for
it is,
the
mate, yeah.
King's birthday in October, but that's fine. So we would have expected perhaps, and sometimes it doesn't work out that way, that we have different results because of the holiday distractions. But we got still solid results despite holidays, which is just underscoring how robust the auction market and our housing markets continues to be. But the real interesting thing was that despite the holiday, we got another very strong weekend of listings. So sellers are still happy to engage the market. Now, I mean, in relation to, a holiday weekend last year, same holiday weekend, our numbers were higher, obviously lower than the weekend before, which was a non-holiday weekend. So let's have a look at those results. Sydney, 470 auctions, not a bad number of auctions for a holiday. Clearance rate was a little higher in Sydney, 72.9%. That's still a result that favours sellers. Obviously, auctions well down on the year before, on the week before. But compared to the year before, again, a big surge in the number of listings compared to the same weekend last year. And the clearance rate wasn't that far behind where we were a year ago in Sydney. We know that was the strong part of the market. So most of our clearance rates in our capital cities are below the results we had a year ago, because that was the boom time market of recovery. But still, nonetheless, some reasonable results. Melbourne was the exception. It had a 58.1% clearance rate, so clearly affected by the holiday weekend. In Melbourne and Sydney to some degree, we do see a significant lower proportion of higher priced properties in the market over holiday periods. So that tends to reduce the choice of buyers out there, and then that can act to push clearance rates down. But again, the same as Sydney, 414 auctions compared to 253 over the same weekend last year. So this is a trend that's been going all year. We've seen this surge in auction numbers. In fact, record numbers of auctions over the first period of the market this year, compared to the same period in other years. So plenty of confidence there from sellers. And clearance rates, a little bit down in Melbourne, but still in the other markets quite healthy there for sellers. Brisbane, no holiday, and numbers about the same as the week before, but a better clearance rate for Brisbane. And we know that anything over 50% is a good result for Brisbane, because it does have a different auction culture in terms of its marketing campaigns for auctions. It can tend to move from an auction to a private sale quite quickly. So it's not looked at as a be-all and end-all as the other capital city markets have. But again, Brisbane numbers were higher than the same time last year, but the clearance rate was lower, because that was a booming market in Brisbane a year ago, where we saw record clearance rates we hadn't seen before. Auction numbers down in Adelaide over the holiday, but again, well above where they were a year ago. Strong clearance rate, a little bit lower than the week before, but higher than the same weekend last year. And Canberra came up with a big surprise. 40 auctions in Canberra, again higher than the same weekend last year, but lower, of course, than the previous weekend. But this is the biggest clearance rate we've seen in Canberra for a long time, 74.9%. So does it herald what we've been predicting, a revival in that Canberra market? Well, we'll have to wait and see. Let's remember, it was a skinny market for reported auctions in Canberra because of the holiday weekend, and that can tend to mess with the clearance rate. So let's wait the next couple of weeks before heralding a consistent revival in Canberra. But nonetheless, the figures are the figures, and they were quite reasonable for that holiday weekend, but again reinforcing how positive sellers are in regard to the prospects of the market. So this is the charts now. These are the charts for the trend, the monthly results. And we can see there Sydney holding its own, a little bit lower so far over June compared to May, but we're continuing to track above 70% sellers market. Melbourne down, tracking where it was so far over June, where it was in May. We're on watch with Melbourne to see if a revival will occur. There are some early signs it's on the way, but we'd need to see higher auction clearance rates to be sure of that. Brisbane, again, good. These are good results for Brisbane, and you can see a year ago they were, really mad results for that Brisbane market, which typically, even in stronger times, has a clearance rate over 50%. Adelaide, still good market, still the strongest market in terms of overall clearance rates of all the capitals, but similar to the others, tracking below those crazy boom time rates of a year ago. And Canberra, yes, well, is the Canberra market on the way back? Well, it's looking a lot better there, and certainly tracking above the results of the last 3 months of last year, where the Canberra market really did disengage from the Sydney market. And a few factors there at work, but maybe some early signs that Canberra's starting to pick up, because obviously there's some value there given its relationship with Sydney and how prices has disengaged from that Sydney market over the last 6 months. If you're looking for those auction clearance rates, every Saturday night, 6:30 on my LinkedIn account, Doc Andrew Wilson at LinkedIn, you'll get the snapshot results of all the capitals, and then the full national report comes out Sundays, and that includes the regional breakdowns for Sydney and Melbourne and the top 10 sales in each of the capital cities under the hammer on the Saturday. Just putting everything together, we've mentioned about all those sellers coming into the market and clearance rates still being reasonable. But what we're seeing is when we look at not clearance rates or listings, we put them together and translate them into actual sales. So how many sales have we had so far this year under the hammer on a weekend? And you can see there big rises compared to the same period last year. Sydney up nearly 30% more sales. So, agents will be happy. The government will be happy because turnover is quite high, of course. Melbourne up 20%, so good results there in terms of the numbers of sales. So there's plenty of activity there. There's no sense of a fragile confidence from buyers in the market. Brisbane up 13%, Adelaide up 12%, and Canberra still dragging the chain a little bit, down by 3.3%. If you want a copy of our latest national auction market report, there's the QR code. You can take a picture of that. It will then give you a link to the latest weekend auction market report. As usual, we'll now finish off by giving a plug for our My Housing Market Infinity app. You need a password for this app, so
good on you, Doc.
Get the link; it'll take you there. But Infinity is the source of the password. So get onto the folks at Infinity, and they'll give you a password to our great little app. Works beautifully on your phone. This is a screenshot here. You can filter. This covers every suburb in Australia that has data. Every suburb in Australia. It's updated daily. So you can filter for price or rent. You can filter for the state and regions, and that's either the regionals or the capital city region. We can filter for suburbs, obviously. The type of property, you can filter for house, unit, or townhouse, and also the number of beds. So we've used Blacktown here as our example. You can see there we get the median price, the low price, and the high price, not just the median. So it tells you the range of prices that have been asked. And of course, these are asking prices, let's remember. So it really tells us what's happening in the market here and now and what sellers are thinking about. But it also gives you the number of listings. And we can do exactly the same thing for the rental market. And there's the screenshot for Blacktown for the rental market. Median rent of 600, high of 700, and just 4 properties, no houses, 5-bedroom houses, no surprise there for rent in Blacktown. Next week, we've already alluded to this. The May labour market will, we had over 4% unemployment rate last month in April. It's still pretty low, 4.1, and still a strong labour market, but the trend has been for higher unemployment, which will be what the Reserve Bank to some degree is looking for. It's still a full employment economy. Let's not get silly about these numbers. It's still a very strong economy. And of course, we have the decision from the Reserve Bank a little later this month because of their new timetable. It's all different this year. But we'll have the RBA interest rates likely to be on hold again, as we discussed, but we'll go through that next week. And of course, the latest auction results. So if you want a copy of this week's report in terms of a PDF file, there's the QR code for a copy of that report. So another big weekend in property. No good news there for tenants, unfortunately. Remarkable collapse in or decline in vacancy rates across the board. Maybe some signs there, Melbourne market just easing, but that's just probably a one-off for the month. So we'll look forward to our next report going forward. So that's it from My Housing Market for this week. Thanks everybody for watching, and stay tuned next week for all the latest and current news on the housing market. So with that, I will bid you all farewell.
As always, Doc, thank you so much. Really appreciate your time. Looking forward to next week's episode, mate.
Yeah, no, thank you very much. And I love doing it. So I'll be back.
Take care. See you later, Doc.
Thanks, mate.